To wait so early. We appreciate that. As she said, my name is Heather Knight, and I am the Regional Manager for Nugent Software on the banking and finance side, covering the Midwest and Western region. And then today we have a couple of guests here that we'll introduce as we get a little bit further into the presentation. So we'll go ahead and get started on our focus of the art and science of digital lending. Our first few minutes we're going to be spent with a video, so I hope your eyes are truly focused and you're ready to try to pick things off the screen real quick. And I will give you a heads up, it might be a little loud, but we wanted to make sure that everyone towards the back of the room could hear it, so don't be caught off guard as we get started, okay? Hopefully everyone was able to keep up with the slides as they were going forward and recognize the difference in the art form along with the science and the understanding of how we need both sides of the brain, or two different forms of thinking as we speak to digital lending. And we've got Nancy and John here to speak today to their experiences within two financial institutions within the Northeast, and how that has impacted not only their thought process in adapting and selecting a solution to work with them through those life cycles and milestones of lending, but also thinking ahead into the future, recognizing how that's going to affect them and impact them, whether that's through mergers and acquisitions, through changes in upper management, thought process, and heaven help us, I'm sure we've never experienced that regulations change. So regulation change, having to be adaptive within the solution and how you can do that. So definitely taking that focus on how both sides of the brain and the art and the science is necessary and has a big impact as you go through your review process. And we speak to, what's digital yesterday is not digital today or tomorrow. If you had that process where you start working on a project and as you get further down into it, you realize that you're already behind time. And I think we often have looked to other people to set the standard and the examples within the industry. We wait for another financial institution to do something or put something into place because we don't want to be the first one. And then often we find when we're not the first one, we're the last one, and we're trying to not only put something into place, but catch up for all the time that we've lost. And I'm sure that's also often been an experience for you as you're implementing a solution as well, depending on how you're prepared and ready for that solution and that change, that what you start putting into your scope of work now has to be adjusted through the implementation process because you realize that was up to date with where things were currently, but now we're behind time. So really just continuing to have that forward thinking process and again, utilizing both sides of the brain for that. So our first speaker is going to be John Smith, who is the Executive Vice President, Chief Information and Administrative Officer for United Bank. I'll let him give his background as well as talk a little bit about United Bank, and then he's going to speak forward on the science of it.
Thank you, Heather.
Good morning, everyone. I appreciate an opportunity to come and speak with you this morning. Hopefully, you won't regret not having slept in after we're done. Nancy and I hope to do a pretty good job at least explaining our experiences to you. So I wanted to start with, a little bit about me. I've been working in large banks, medium-sized banks. I did a pure play startup digital bank. I've been in finance companies. So I've really seen the movie of loan originations in kind of all its shapes and sizes. Although the disclaimer would be, we all have our own way of doing things. It's got to get personalized to your own business. So what I'm going to talk about is the way we chose to approach it. So please, that's obviously not the only way. So in terms of the bank, I just wanted to tell you a little bit about the bank itself. So we're based in Hartford, Connecticut, a little over $7 billion in assets. A traditional bank in terms of products and services. We've been in a conglomeration of mergers and acquisitions over the years, so obviously the business processes have been affected by that. We focus on large commercial, small business, and we have a consumer portfolio. So I would categorize us as typical. I came to the bank about 2.5 years ago, and our CEO asked me to come in and really look at the technology, the business processes surrounding the technology, the way we run projects and administer them, kind of the PMO, and really try to make sense of it all. And I think that started our journey with Nugent, of course, along the way. So I wanted to just, obviously, we're in the banking business. This is what we tell shareholders and the investment world our major goals are. Obviously grow loans and deposits, get better yields, make the right investments, and increase shareholder value, obviously, right? I mean, no problem, right? So I think that's what we've been focusing on over the last several years. So what I'd like to focus on today is kind of with the theme of the science side of things. As I went around and talked to the various lending groups, the story really emerged that it's about the customer experience. It's about how you make it easy for the customer to do business with your bank. It's about speed, moving fast, being able to make decisions fast, respond to the customer fast, and really try to operate on the customer's terms, the way they want to operate, as opposed to dictating how things are going to work. the flexibility side of things. So we kind of grouped our strategy around these three kind of major objectives. You know, and you know, I would say that, you know, what's going on in the world today, you know, we're competing with each other, but really what we're competing against is the customer's last digital experience, which will usually be something like Amazon or Netflix or some non-bank where they had a very good digital experience that they're comparing us against. So very often we think about competing with each other, which of course we are, but the reality is it's the experience that we're trying to grow and improve, and that transcends industry. Customers want to feel like they're having the experience on their terms. So we kind of grouped everything in these three buckets, and I think that we ended up trying to figure out what the why question. Some of the stats on this slide are compelling in the wrong way. You know, why aren't we more digital? Why isn't, you know, why aren't more banks moving digitally? Some are being very aggressive, but why is it the minority and not the majority? The tide is turning. You know, I'm certainly a believer in that. We've made quite a few investments in the future in that way, but the reality is it's changing, and you know, being late to the party at some point will be an issue from a competitive standpoint. So you know, so that's kind of what we're up against. You know, there's been a lot of terms thrown around. This concept of open banking is getting a lot of play. There have been Gartner has you know, spoken about it. There have been some white papers on it, and it's not a new concept. It's about leverage. It's about how do you leverage what you're doing, do it once, and use it many times across the organization. We've been our bank for sure has been very siloed. Consumer loans, small business loans, commercial have been independent with channels and processes that were completely independent from a technology perspective. It's hard to do, it's hard to maintain, it's hard to stay current, it's hard to ensure that you're keeping up with what's going on in the world and staying competitive. So, you know, so the point here is think end-to-end, look end-to-end, think about how you automate things and leverage it across the bank as opposed to, you know, hardwiring it, if you will, to one line of business or one type of product. Very difficult thing to do. It's an organizational challenge. It's a cultural challenge. And it requires a lot of hand-holding to get there. But, you know, it's now becoming vogue, and now it has a term called open banking, but really it's a leverage point. The term platformize is not really a word, but the idea is to move away from a bunch of independent applications to a platform where you are doing things differently but consistently. So what I mean by that is, you know, regardless of what type of loan it is, you've got to take an application. You've got to figure out who the customer is. You've got to underwrite it and make a credit decision. You've got to prepare documents. You've got to execute the documents, sign and e-sign. You've got to fund the loan, and you've got to book the loan. And so while the complexity and the differences is not that process, it's the how. The specific loan categories have unique requirements that make them unique, and therefore, but the overriding process, you know, is the same, and it needs to be tailored. So how do you create a platform that you can use across the organization, but each loan category needs to be able to stand on its own 2 feet, be independent of the others in terms of how you want to do things and what products you want to offer. You know, that's the challenge. So how do you get it all into one platform? So our story, we started to look, as I said, when I came to the bank, we had disparate platforms. We had a commercial origination platform, a consumer, a mortgage, small business platform, all unique, all requiring support, all having unique business processes. And the idea that we came up with was to try to start with smaller loans. So we took the approach to start with smaller loans, and the concept, I kind of coined the term, no touch, low touch, high touch, irrespective of category of loan. So no touch loans might be consumer loans, opening a deposit account could be a no touch process, even though it isn't on the lending side, but it's related to the customer, and you want, if a customer is going to look to borrow money from you, wouldn't it be nice if when they opened an account it kind of worked and felt the same way? So we included new account opening for consumer and commercial deposit accounts in our design for where we went. So no touch might be a consumer loan or a deposit account. Low touch might be a small business loan, smaller end small business loan, where you can really drive some straight-through processing through and get as much of the leverage of the technology, less start-stop on loans. They're smaller, they're a little less complex. The customers are used to a consumer kind of look and feel and flavor. And then, of course, large commercial, high touch, where there's a lot of start-stops in the process and a lot of hands that have to get engaged during the flow. So we broke them up less about size of loan or loan category and more about, is it no touch, is it low touch, is it high touch, and tried to work our business processes that way. I did want to make a comment about business process. Don't underestimate, in my view, don't underestimate the time. There's the technology and then there's the business process, and they have to meld together. Don't underestimate the time it will take. If you're intending to blow up your current process and come down with a new one, it takes a lot of time. It takes a lot of engagement. It takes a lot of groups in the bank to come together to really figure out the new way. It can't be in a vacuum. It can't be one group saying this is the way we're going to do it. It's got to be collaborative among the group, and it takes a lot of energy to get everybody working together in order to kind of memorialize that flow in a digital platform. It also requires the voice of the customer. You know, we do quarterly customer surveys. We use the Greenwich Associates, and we're constantly pouring through that to see what are the customers telling us about our processes that they don't like or are broken. So business process is important, and that's where you kind of look at the paper. You know, I like to talk about, you know, once there was an efficient process, and then, you know, the examiners came in and they said, oh, you know, add these 3 steps. And then the audit department did a review and they said, okay, we got to have the spreadsheet that covers that. And then there was a fraud situation that occurred, and somebody said, okay, you know, you need a new reporting and you got to track that. And then the compliance people came in and added 3 more things. And the business process that once was fairly standard or efficient is now clunky, cumbersome, a lot of room for error, let's put it that way. And so what you want to do is, I think, and what we tried to do is step back and say, let's blow it up and let's start with what's common about loan categories and start to automate what's common and try to leverage that across the organization with the idea of taking out as much paper as possible. I just want to make a comment as with the theme being the science side of it. I don't know how many of you use the rules engines, but it takes time to get comfortable with a rules engine I would advise go slow. I would advise take your time. It's an experiential type of thing where you don't just turn it on and expect you're going to approve loans based on a rules engine. You're going to want to watch it, tweak it, understand the experience, have your credit people basically climbing all over it to make sure that the results are what you want. So it's another one of those kind of crawl, walk, run kind of approaches where you start small, begin the process, tweak, look at the results, tweak, kind of an iterative process around, around rules. But, once you bake them into the system, you really have a lot of documentation. And that's one of the reasons why we wanted to go with a single platform, because you're basically embedding your documentation in the system, because the flow of the system is how you do things. And part of the reason why we landed on Nugent was its roots are as a BPM platform, not only for banks but for other industries, where they didn't come at this as we're a commercial lending vendor. They came at this as we're experts in business process, we're experts in BPM, and whatever process you want, we're going to give you the flexibility to bake that into your system. Obviously, that is not kind of a ticket to get everything, but one thing you can guarantee is that the business processes are going to change, and the customer expectations are going to change. And if everything is hard-coded and everything is difficult to implement, then you're just going to fall farther and farther behind, because no one really has enough resources to keep all these platforms up to speed all the time. I did want to comment on integration, and this slide talks about core integration. I mean, we are booking loans and deposit accounts on the core automatically. That was integration with Nugent and our core vendor. But I want to broaden the discussion of integration. So we have 19 integrations. So when you start adding them up, you've got e-sign, you've got documents, you've got, of course, 3 or 4 core integrations. You've got customer identification, you've got OFAC, you go down the list. And we went down the low touch, no touch, and from a loan complexity perspective, they're easier. But from an integration perspective, they're harder, because if you're going to close that loan online, then you're going to have to prepare the docs, get them to the customer, sign the docs, return them, and move along the process. To automate that is not easy. And so integration is probably the longest pole, at least my view, in the tent, depending on how straight through or end to end you're really trying to get. And it really is the thing that we spent the most time on, because we really wanted to automate as much as possible. From a compliance perspective, I would just say just keep the compliance people engaged. And the last thing I just wanted, my last bit of advice for you is keep the organization engaged. Make sure your executive group and your board are knowledgeable. Build momentum on what you're doing, because it is a change in culture and it is a change in the way of doing business. And don't underestimate and don't overcommit. It will be very easy to try to do too much and not be successful. Try to crawl, walk, run. Thank you.
All right, thank you, John. We appreciate your approach to the scientific or one side of the brain thought process with technology. Next, we have Nancy Foster, who is the SVP Credit Admin for BNB Bank, formerly known as Bridgehampton National Bank. I still have to say that. And she's going to take the more approach on the art, and I'll allow her to give a background on her organization as well as her experience within the industry.
Okay, well, very similar to John, Bridgehampton National Bank is a growing bank. We're about $4.6 billion. We're headquartered on Long Island. We do have a branch in New York City. And our path to where we got to was a little bit different. We were a bank for 100 years out on the east end of Long Island, and about 10 years ago, there was a major change in management structure. Some of us had worked together at a bank called North Fork Bank, which was acquired by Capital One. So we came to this small little community bank with a desire to see it grow and expand and ultimately someday become a regional bank like our previous bank of North Fork. So in the first years we did several acquisitions, we grew some de novo branches, and by about 2015, we had completed those, and we began to look internally and said, okay, we've accomplished that, but where do we see ourselves going? Where do we go from here? So the internal nickname for the initiative was called Believe and Beyond, and that was when actually we started to look at all of our infrastructure, our foundation, what our systems, what technology we were leveraging, what we weren't leveraging. And about 2 years ago, I was actually at an RMA presentation along with Nugent, because we had just embarked on that journey, and I discussed then kind of where we got, how we selected a vendor. And now I'm back to talk about some of the other things of where we've seen how using the art side of pulling together technology, we could really build an ideal processing system. You know, we recognize that commercial lending has always been a people-type business, and even internally, as we got, our focus is on the customers. Customers are typically interacting with people in the bank at the branch level or in the larger commercial deals with relationship managers and lenders. And we didn't want to take away from that. We said we need to keep that focus. We also felt that in a very competitive world of retaining and attracting quality employees, we needed to empower them with decision-making capabilities and technology that will allow them to deliver the best product they can to their customers. And through retaining of employees, we can also then retain customers. So the people focus was very important to us. We pulled in, and some of the stuff that John alluded to, of bringing in people within our own organization. I think in hindsight, where we probably didn't do enough was surveying of our customers. So we were building a customer process that was based on our internal people's perception of what our customers wanted. I think, into our journey now, we're beginning to see that we need to continue, and I think this is always going to be an evolving process where we have to assess how we're delivering our products and services. Our people are very important to us. We constantly ask for their feedback, and as I said, we actually did not have a chief information officer until about 6 months ago, and when the gentleman Arthur joined our organization, he said, "Where are all your customer surveys?" And we said, "We have none." And he kind of laughed and he said, "What are you doing building processes? You're just replicating what you think your customers want." So it's been a real internal push lately to be a little bit more customer focused. Going through again, our design process of our people, we have teams, we have partners. We've looked to leverage both just our internal resources, but looking to the assistance of vendors to helping us to define some of the best processes out there. We had a very strict internal project management that tried to keep us disciplined and on track and on target with meeting time frames. And but again, we're seeing that we have to be iterative and continue to adapt as we move along. I think when we embarked on our vision and you're standing there at the train station, well, you need to know where you're heading. You can't just get on a train to nowhere. And I think clearly trying to design a vision of where you want to go and how you anticipate getting there is critical as you begin this process. But I think also recognizing that it's not a straight path, that there's always going to be turns in the road, and being able to have something, a configurable platform that would enable you to make those adjustments as you're moving on that journey is really critical. When we started, and John kind of also alluded to this, we were somewhat going to conquer the world. We have various different products. We have business banking, we have SBA lending, we have equipment finance, we have commercial real estate, we have middle market lending, we have consumer lending. And we pulled everyone in simultaneously, and we were going to get this implemented. And shortly as we began, we realized that really is not the best way to do it, because it's only going to prolong your implementation. And let's tackle, again, design something that where there could be, you know, common processes, but focus on some of the simpler loans. So we really went live with our business banking, and we're continuing to enhance that now. I have some of my colleagues with me from business banking. We're looking to try to see how we can implement, again, like the low touch, more of like almost scoring in that, and being able to integrate that with our current platform, our loan origination system, and those integrations out to other models and software. So it's really been critical in that respect. Our commercial real estate lending was the next. Again, our commercial real estate process was pretty straightforward, but it was more complex than business banking, building in for appraisals, environmentals, and a much longer process. The throughput takes a little longer to accomplish. And then I think where we saw the need for the most customization was in the middle market or large C&I loans, where we tend to customize a lot of those transactions for customers, and some take longer. There's a lot of back and forth. It's very iterative with our customers. But, you know, the key to our success was showing our staff internally, like, this is something good and this is working, and looking to see. In addition to utilizing just a loan origination system and end-to-end there, where we have the documentation and the booking and the auto booking to our loan platform, we also have built out, subsequent to our initial launch of the origination system, a complete review and portfolio oversight, where we're tracking all of our covenant tracking. We're able to produce reports about, you know, how many of our customers are actually in compliance with covenants, not in compliance with covenants, and also the annual review process of reaching back out to customers for financial statements. But it really wasn't all done in a day, a week, a month. It was over a period of time, and we're continuing to still build upon all those processes. Again, as we went on this journey of strong partnerships, and not just with the origination system vendor, who obviously it's Nugent, but I took full advantage of the conference today and over the last few days of meeting with vendors and just recognizing, because as the beginning slide said, what is digital today won't be digital, and there's constant enhancements and new technology coming out there, and how as a bank we can best leverage that to deliver the best products and services to our customers without sacrificing credit quality. So those partnerships and introducing some of, you know, whether you call it integrations on the more technical side, I'll say, you know, we have this vendor that does our loan documents, and they have to work with the loan origination system vendor, and how we were able to work through that in our test phase, and how we could automatically book our loans to our Fiserv as our loan system vendor, and the integration there and those partnerships, and how well people can all work together to accomplish the goals that B&B has for itself, has really been, you know, it's a very rewarding thing to see how you can leverage your vendors and they can assist you through this process. So in looking again, you know, what is success, and you know, some of the strategic goals, and obviously improved revenues, return on shareholder, and so ROI, return on our investment. When we originally tried to, you know, determine what did it cost to process this type of loan, and we could document that, and it was challenging because, you know, not every loan is equal, and some loans, especially on the more complex deals, require X number of manpower hours and others, but we attempted to quantify an initial cost per loan process. And when you measure your return just based on, well, your cost reduction, that's only really half the equation, because what we began to see is our capacity, since we had so much efficiency in the process. If we had 10 underwriters that previously they could handle, 20 loans or their capacity. Now those same 10 underwriters can handle 40 loans. So just the cost savings per loan multiplied by the increased capacity is really how we're improving our NOI and measuring our NOI on our return on the investment in technology. So on the next few slides, and again I'll ask John, I think for his input on some of this, we look at both positive elements of the return, and we've talked about it on the quantitative, kind of on the left side of this slide. It's very quantitative measures. How many loans were processed? How many dollars does that equate to in funding? What's the average revenue per loan? But I think on the right side is more some of the qualitative metrics that don't always have a price tag to it, whether it's positive customer perception. We also just had engaged an external vendor who did a survey of not just our bank, all banks on Long Island. And it was interesting to see some of their perception, just because we were a smaller community bank, although they've never had the experience with us, they perceived that we were not as technologically advanced as a Capital One or a Chase. So what we're trying to do is dispel those myths and show that we can really have a much more technology-driven and be responsive to the customer's wants and needs. And there's some more on the qualitative side, and I don't know if, John, did you want to add anything to?
We also didn't come at this from a cost reduction perspective. It was about customer experience, quality, less errors, building capacity, be able to do more with the same head count. And I think that in the metrics that we're tracking, I think one thing we found was that there's things that we weren't tracking that we should be, that the system kind of told us. We also do customer surveys, as I mentioned earlier, and so we're trying to use that qualitative tracking there of getting that feedback loop. What is the customer telling us, and therefore what tweaks do we have to make in the system?
Yeah, and I would just ask at this point, Nancy or John, did either of you go through mergers and acquisitions or change in management through the last few years with the new system, and how is having a configurable platform that really is adaptive, how has that been beneficial in that process?
Yeah, I can take that one. I mean, we've done acquisitions and we've had changes in leadership on some of the lending groups, new thinking that's come in. And I think if you can get to the configurable platform, especially like in an acquisition, what you want to do or try to do is embed your credit policy, embed your processes into the acquiree as soon as possible, because conversions take a long time to do, and you can begin to take the system, this kind of a system, and kind of increment your way along down the product by product, as opposed to waiting for a full-blown conversion. So it helped in that we kind of got the acquiree drinking the Kool-Aid that we were selling from a policy perspective very early in the game, and said, no, this is how it's going to work in the new organization.
And I'll just add, we have not had an acquisition or really a big change in management, but interestingly, we had a new board member join our board, and he is really driving profitability and return, and his expectations is to be able to compete against a lot of these non-bank financial institutions, and so having the platform, and that's what we're exploring now. We're working with some vendors as possibly on the business banking, and we didn't really have a robust business credit card product, so we're looking to launch those, and it's really being driven by a new board member. And the last is just on some of, again, the things that, from a negative perspective, things that are out there. Obviously, you don't want to be the ones that are out there where you have the reputation, oh, don't submit a loan to B&B Bank, they take forever to get back to you, or, everything they do, I'm back and forth, it's never a one and done type process, they nickel and dime, I have to go back and forth, and there's tons of loans then that never get through to actually even being funded, even if you approve them, just because of the lags and the stops and starts in the process. So by having a platform where you can measure some of that, and we're looking to, from a management perspective, where are loans stalling in our process? Where do we need to place more emphasis to improve the process? And of course, you know, we all have the oversight of regulation and risks and all of that. And while we try to be flexible and being customized loans, especially on the middle market side for our customers, a lot of that also could be, there's introducing more risk to a process, and things could be, you know, if you structure every loan and it's so tailored. So by having some standardization, so I'll call it standardization with flexibility, we're actually ensuring that we're capturing all the key elements of a transaction and then customizing where necessary.
Ditto.
That was easy. So, you know, again, our journey has been interesting. It wasn't always, you know, I mentioned about seeing where you're going to in the direction when you get on that station, but, you know, the world changes as you get on that train, and the introduction, as I said, a new board member, do this, do that, change in our chief information officer has enabled us to kind of satisfy some of their demands. So it's been an interesting journey, and I'm sure it'll continue, and technology is ever changing, so we're excited to be hopefully at the forefront of that technology.
Thanks, John. Thanks, Nancy. So again, the overall kind of encompassing vision here is not only the art and the science, but being able to have a configurable, unified platform that allows you to get from that station to your destination, and recognizing that a platform that's going to allow you to adapt and make those changes, whether you get derailed, whether you have to make an extra stop, that it can adjust and adapt with those changes without throwing you off completely. Continuing to grow and move forward and not have to reevaluate and bring in a new platform every single time you need to make a change. Instead, that you can continue to stay with the digital times and advance forward as quickly as possible. So I believe we are at the end of our time here. So we greatly appreciate everyone's attendance, and I don't think I saw anyone fall asleep, so I think that's a great thing for the last day. So thank you guys so very much, and feel free to visit with John and Nancy. We're short on time here, and I know we have a keynote speaker immediately following, so we want to make sure we get everybody the opportunity to get there for that speaker. But I do know that John and Nancy will still be here today, as well as you're welcome to stop by the booth as well for any questions.
Good luck, everyone.
Thank you.